Markets care if things are getting better or things are getting worse. It doesn't mean that it'll go in a straight line, but at least the data is somewhat supportive.
Chris, it is a big week economically speaking from a data standpoint, and we got our first nugget this morning, which is CPI flat for the month.
Yep.
All right.
Which isn't terribly surprising. I mean, oil definitely kicked up, and other things have too, but if you look at projections into the back half of the year, I mean,
What we talked about last week, right?
Yeah, I mean, it kind of looks like we could end up in Goldilocks, that is, rising growth, but falling inflation, and this is a good start. Meanwhile, our friends at the Fed are all projected a bit more hawkish, right?
Mm-hmm.
You know, our chief strategist, Jeff Sott, years ago taught us, hey, things are either getting worse or they're getting better. I mean, there really is no in between. Mm-hmm. And this looks like the Fed is projecting worse, and yet CPI is getting a little better.
We've talked a lot about the lip wedge too, right? You know, Fed governors or the Fed chairs
just
speaking
talking,
harsh,
right?
And maybe that sets the tone to slow some business things down so as to tamp down some of the inflation stuff.
Maybe, but let's look at the growth side, okay? This is the estimated next 12 months S&P 500 equal weight operating margin. It's up. It's at all-time highs, okay? Not terribly surprising if companies are getting more efficient, but I mean,
it's not, and being that it's equal weight, it's not reliant on the monsters, right? So that is a positive sign, no doubt. That is breadth that we were talking about last week as well.
Exactly, and now we're heading into earnings season. We've got a lot of banks putting out their earnings this week. Today we've got Goldman, J.P. Morgan, Wells, B of A, I think. Some more coming later in the week. I mean, definitely a bank-heavy week. It would not be surprising to see banks do a little better over the next 12 or 24 months if indeed we do get substantial deregulation.
That's right.
As many think we might. And then finally, if you look at the companies who have reported so far, it's only 18 out of 500, but 94% of them have beaten earnings with an average surprise of 14.5%.
That supports that equal weight number.
Markets care if things are getting better or things are getting worse. It doesn't mean that it'll go in a straight line, but at least the data is somewhat supportive.